Hello, I'm Dr. J from OptionMonster.com. The reason Jamie's reports are so valuable, folks, is the VIX is a metric of risk in the market. So as it picks up, that means people are worried about protecting. If the market's been going up, when their VIX is going up, well, then that means they want to protect. They're worried about the market rolling over. If the market's been going down very hard, well, obviously, then they're worried that maybe the market makes a U-turn and goes to the upside. So you got to watch the VIX. That's why this report is so important. Remember, you can follow us on Twitter, twitter.com/optionmonster.com. Take it away, Jamie.
Welcome. This is your Option Monster Volatility Sonar Report. From the floor of the SIBO, this is Jamie Tyrrell of Group 1 Trading. Well, we've seen another soft up day in the market. Behind good manufacturing and housing reports, the S&P 500 has rallied over yesterday's losses and is up a little over 1%. In the VIX, we're seeing it decline almost every day. A few months ago, we were routinely up in the 40s, and we've walked down, and the cash index touched 25 today. The future in the front month, July, at about 27. So we've seen an environment of decreasing volatility all around the options world. People charging less for insurance on stocks right now. And in the VIX, what we've seen over the past couple weeks is in this declining volatility environment, more and more people are buying those upside VIX calls, perhaps as a hedge for protection. They've been going after July and August. So the August 50s traded first, then the 45s, and as we continue to leak down, the 42s have traded some. Today, we saw a buyer of 15,000 August 45s for 70 cents and a buyer of 25,000 July 45s for 20 cents. So the dollar values on these options are very low as compared to where they would have been months ago. So it could be that this is, as volatility walks down, this is somebody's hedge against another flare-up in the market and a return to the elevated volatility levels. One interesting trade in September, with all these upside buyers, we had somebody quote a size market on the September 50 calls. You could have guessed that they were going to buy them, but we had a seller of 15,000 Sept 50 calls for 67.5 cents. So that seemed to reverse the trend a little bit. The buyers are mainly in July and August, more nearer term, and that really put a damper on upside volatility in the further out back months. People not so interested in that far upside to the 50 level anymore in September, October, and beyond. Mostly short-term, dollar-cheap upside call protection plays. That's what we've seen here. This is Jamie Tyrrell with Group 1 Option Monster.